Ever wondered how a sudden oil crisis can shake the entire stock market? The 1973 oil shock is one of the most pivotal events in modern economic history, and it had a profound impact on both energy markets and the global economy. It was a wake-up call for the world, highlighting the importance of energy security and the interconnectedness of global markets. Before we dive into the nitty-gritty of the crisis, let's set the stage. The early 1970s saw a significant shift in the global energy landscape, with the United States, once the world's largest oil producer, becoming increasingly dependent on foreign oil. This shift, combined with the formation of the Organization of Arab Exporting Countries, or OPEC, created a perfect storm of price volatility and supply uncertainty. In 1973, the Yom Kippur War broke out, and Arab oil producers, in response to the United States' support of Israel, imposed an oil embargo on several Western countries, including the United States. This move sent shockwaves through global markets, causing oil prices to skyrocket and supplies to dwindle. The significance of the 1973 oil shock cannot be overstated. It marked a turning point in the global economy, highlighting the dangers of over-reliance on a single energy source and the importance of diversification. In the decades that followed, governments and corporations scrambled to adapt to this new reality, investing in alternative energy sources and implementing conservation measures. The crisis also had a profound impact on the global economy, precipitating a recession and marking the beginning of a new era of stagflation, a toxic mix of stagnant economic growth and high inflation. The 1973 oil shock was a harsh reminder of the interconnectedness of global markets and the devastating consequences of supply chain disruptions. In the aftermath of the crisis, consumers and businesses alike were forced to adapt to a new reality of high energy prices and supply shortages. Citizens were forced to wait in line for hours to fill up their gas tanks, and businesses struggled to stay afloat amidst the uncertainty. The crisis brought home the harsh realities of energy dependence and the need for sustainable solutions. As oil prices continued to soar, the cost of goods and services skyrocketed, eroding consumer confidence and sending economies into a tailspin. The crisis was felt across the board, from the humblest of households to the mightiest of corporations, as the ripple effects of the oil embargo coursed through the global economy. Supply chain disruptions were particularly brutal, as manufacturers struggled to secure the energy needed to keep their factories running. The crisis laid bare the fragility of global supply chains and the devastating consequences of disruptions. In the face of uncertainty, businesses were forced to innovate and adapt, seeking new ways to reduce their energy dependence. The 1973 oil shock also had a profound impact on the global transportation industry, as airlines, trucking companies, and other transportation providers struggled to cope with the soaring cost of fuel. The crisis marked a turning point in the history of transportation, as companies began to explore new, more efficient technologies to reduce their fuel consumption. The impact on the automotive industry was particularly severe, as car manufacturers scrambled to adapt to the new reality of high fuel prices. The crisis marked a shift towards more fuel-efficient vehicles, as consumers demanded cars that could stretch their limited fuel supplies further. The 1973 oil shock also had a profound impact on the global shipping industry, as vessel operators struggled to cope with the soaring cost of fuel. The crisis marked a turning point in the history of shipping, as companies began to explore new, more efficient technologies to reduce their fuel consumption. In the face of uncertainty, governments were forced to intervene, imposing price controls and rationing to mitigate the worst of the crisis. The United States government, in particular, took drastic measures, establishing the Federal Energy Administration to coordinate the country's energy policy. As the crisis deepened, the stock market began to feel the heat, with investor confidence plummeting amidst the uncertainty. The Dow Jones Industrial Average, which had been trending upward since the mid-1960s, suddenly found itself in free fall, as investors scrambled to get out of the market. The crisis marked a turning point in the history of the stock market, as investors began to realize the importance of diversification and the dangers of over-reliance on a single sector. It was a harsh lesson, but one that would shape the course of investor behavior for decades to come. In the midst of the chaos, OPEC held all the cards, using its control over the oil supply to maximum effect. The cartel's decision to restrict oil production sent shockwaves through the global economy, causing oil prices to skyrocket and supplies to dwindle. The 1973 oil shock was also marked by a series of pivotal moments that would shape the course of the crisis. One such moment was the decision by the United States to impose price controls, a move that would have far-reaching consequences for the economy. Another pivotal moment came when Exxon, one of the largest oil companies in the world, was forced to slash its dividend payment to shareholders, a move that sent shockwaves through the financial markets. The decision marked a turning point in the crisis, as investors began to realize the true extent of the damage. The 1973 oil shock marked a turning point in the history of energy policy, as governments and corporations scrambled to adapt to the new reality of high energy prices and supply shortages. It was a harsh lesson, but one that would shape the course of energy policy for decades to come. In the decades that followed, governments and corporations invested heavily in alternative energy sources, seeking to reduce their dependence on foreign oil. The crisis also marked a shift towards greater energy efficiency, as companies sought to reduce their energy consumption. Today, as we navigate the complexities of the modern energy landscape, the lessons of the 1973 oil shock are more relevant than ever. The crisis serves as a powerful reminder of the importance of energy security and the dangers of over-reliance on a single energy source. As we reflect on the legacy of the 1973 oil shock, we're reminded of the important role that past events play in shaping our current energy policies. We'd love to hear from you. How do you think past events shape our current energy policies? Let us know in the comments below. And if you want to learn more about the fascinating history of energy, be sure to check out our next video, where we'll be exploring the rise of OPEC and its impact on global energy markets. Thanks for watching.